All right. Welcome back to the channel, everyone out there on YouTube. This video here, I want to take you through a trade that I took last week using top-down analysis, okay? Now, I created a video yesterday for all of our elite members, those that are part of the YouTube membership program. It's a tier-based program to where people can basically support the content of creators like myself on the platform. So in that video, which is made available again for the elite members, I went into detail breaking the trade down step by step so that maybe, you know, if you're a new trader or maybe someone that's just interested in understanding my strategy and actually how I trade it, it basically helps you or aids you into identifying why I took the trade, as well as, you know, every step in between, okay, using top-down analysis, because that's all it pretty much is using a higher time frame chart and walking yourself down to a lower time frame chart and understanding, you know, every part of the setup along the way, okay? But this video here, I just want to show you the actual trade that I took. It was 315 ticks in total on one trade, which is basically 78 points, okay? Now, I did not need a trade anymore after that one trade, to be honest with you, because that allowed me to profit a decent amount of money here on the E-mini S&P 500 futures, okay? So let's talk about it. Top-down analysis using the higher time frame and walking ourselves down to a lower time frame to take our entry, all right? It's all surrounding supply and demand, so let's jump right into the video, and I'm going to show you using top-down analysis what I was looking at. Now, guys, if you hear some noise in the background, it's a little annoying to myself, but there is some road construction going on outside of my home in the community. So please, you know, disregard that or forgive me for that noise in the background, okay? I wanted to get this video out to the community so that everyone can, you know, grasp and understand it in a sense, or just kind of walking you through why I took this trade, okay? Now, what I saw first and foremost was on the higher time frame 60 range chart. Yes, I trade range charts. Please, again, please don't ask me why I trade range charts. It's just a preference, okay? If you trade time-based, tick-based, time or tick or volume-based charts, that's fine. Whatever works for you. I just like the cleanliness and it looking clear to my eye, clean to my eye using the range charts, okay? All right, so I'm using a 60 range chart for my higher time frame, okay? Now this is all surrounds having multiple means of confirmation and confluence. What I saw first and foremost was this demand zone right here, okay, where we had price moving to the upside, as you can see, making higher highs and higher lows. We have a demand zone there, okay? Understand that, okay? So when I saw that demand zone, I waited for price to come back to it, all right? And from that point there, once we tapped into a demand zone, I was looking to scale down to a lower time frame chart. So I went from my 60 range to my 24 range to a 12 range, okay? Top-down analysis approach, okay? I do want to say this. You have to have multiple means of confluence, in a sense, to heighten or to give you a better chance of the market moving in your direction, meaning taking a trade with its higher probability. I always state this because people ask me all the time, what is it that helps you get into a trade? First of all, break of structure. Secondly, I must see a supply I must take my trade at an area of supply or demand once we have the break of structure, okay? Meaning an area where there's aggressive buying, in this case here we have a demand zone, or aggressive selling, which is out of an area of supply. Thirdly, I also want to see a gap or imbalance back at either the area of demand or supply. And, you know, I want to make sure if I'm purchasing or putting on a position at an area of demand, then I want to try to get in at where the price is cheaper, okay? I don't want to get in at high prices when I'm looking to buy, and I don't want to be, you know, getting in at lower prices when I'm looking to sell. I want to sell when the market is high, and I want to buy when the market is low, okay? So here we have, again, price pulling back to a demand zone. Now let's scale down to the lower time frame because it's the setup that I look for. Once we break structure and price comes back to a demand zone, I'm looking to try to get in on a lower time frame. But I want to see something take place before I get into into a trade off of this demand zone off of a lower time frame. Okay, I just don't jump in the moment that price taps right into the zone on a lower time frame. So as we can see here, once price, we have the demand zone right now. When we have a demand zone marked, I'm going to go ahead immediately. Okay, so basically once I see a breaker structure and then I'm looking for my demand zone, I'll go ahead and mark my demand zone up. I go over to my 24 range, okay, or I'm gonna look at my 24 range, okay, because I'm going from a 60 to 24, 12, and I also have a 4 range chart as well, okay. But this chart here was more so inspired by 3 charts, looking at the higher time frame and scaling down to the 24 and scaling down to the 12 range, okay. Now on the 24 range chart, what you can see is here we are right here. All right, that was the last high that price made, and I showed you on the 60 range. Okay, we'll take a look at that 60 range. All right, here it is right here. Last high sitting at 78. Okay, we scale down to the 24 now. There it is right there, that high. Now I'm down on my lower time frame, or a lower time frame. Okay, price. What I'm looking for is price to retrace back. That purple line was what you just saw that signified the demand zone off of the higher time frame. I'm waiting for the retracement back to the zone. As you can see on the 24, the price pulls back and taps us into that zone now. Now, what am I looking for from there? Okay, basically I'm looking for, some type of directional shift in the market and a pullback to take the entry long off of the lower time frame. Meaning I either want to see a breaker structure or some means of shift in the market, change of direction, price breaking above a change of character, a lot of people call it that, and then a pullback to actually get into the trade. All right. Now, what you could have done, some people would do this. Price taps into a zone, they get a break, of price taking out a level or a swing in the opposite direction once they tap into a major area of demand or supply, and demand in this case here or supply, but we're talking about demand here. Price breaks above the swing here. This is on the 24 range now. Okay. Now we do have demand out of this area, aggressive buying right here, because that's all that demand is aggressive buying, or an area of, if you're looking at supply, aggressive selling. This is demand right here. Why? Because we have, you see green candle, green candle, green candle, these big candles here to the other side, a lot of buying, right? Now, some people would allow price to come back to this new area of demand off of the higher time, off the 24 range, and look for rejection to possibly go long. Okay, but what I want to do is, because it's a part of the strategy that I use, is that I want to see price. I'm looking at the last swing to the downside that tapped us into the area of demand, and so I want to scale down lower. The 24 has shown me that we've tapped into the area of demand off of the 60 range. Okay, so now I'm going to move on down to my 12 range chart. Okay. What I see on my 12 range, I'm going to go over to the day that it actually happened. All right. Okay. So this is that area of demand off the 60 range. Okay. Again, on the 24, excuse me, no, this is 12 range, not 24. On the 12 range, we can see price tapped into it right here. Now, this is where what I'm looking for is when I'm talking about a shift, a directional move in the opposite direction, basically a break, and then a pullback to try to get in long. I'm looking for, was there a breaker structure coming to the downside? Okay, there was right here. Price broke this area here at 22. Came down. But what I'm really interested in is what was the last up candle with the move to the downside that tapped us into the area of demand. Okay, that purple line is that 60 range area of demand. Okay, I mentioned that again. This little swing right here, or you could have taken this swing right here. Okay, so if we look at something like this right here, basically, all right, you could have waited for price to take out the top end of the swing right here. All right, but for me, I'm looking at this little swing right here because this was actually the last little push that price did or made before it pushed to the downside and tapped us into the demand zone, okay, off the higher time frame. So once I saw price break above that and then pull back, I was interested in going long because we were both already tapped into, again, back into the 60 range demand as well as the 24 range demand. And typically I like to even see a demand zone on the 12 range. But price didn't pull all the way back and tap right into it, tick the tick. I think we're like 4 ticks away, whatever the case is. But I had already had enough confluence or confirmation to allow me to get into the trade, is what I'm trying to say. So basically what I did was, once price broke above, I got a shift or a directional move showing me that price was taking out, some levels back to the upside. I waited for price to pull back to demand again. All right. And we had demand on the 24. We had demand, the big area of demand was off the 60. Pulls back, taps into that purple line again. What I waited for was price to show me rejection, meaning a break of a candle in the opposite direction, and I went long. And if you look to see what happened, all this area where price was coming to the downside, all right, making lower lows and lower highs, this was liquidity, this was liquidity, this was liquidity, and liquidity here at 78. Look what happened. Price pushed higher, blasted higher, not immediately. It does this ebb and flow type thing where it pushes and pulls, pushes and pulls, meaning it's making higher highs and higher lows. So price likes to pull back, retraces before moving higher. That's just the way it moves, okay? So it did that, and it took out 78 all the way back to the top, okay? So what I'm basically doing is I'm looking for multiple means of confirmation, multiple areas of demand off of both the higher time frame and the lower time frame, but it all starts from the higher time frame, okay? And I want to be in the move or in the trade and moving in the same direction as the higher time frame. So that's what I look to do, and using top-down analysis, okay? So start with the 60 range for me. It could be a 60-minute chart for you, if you trade time-based. But either way is that use the higher time frame, mark your zone, scale down to your lower time frame, look for price to come back to the zone, and then for me, I scale down even lower to see if I can, based by scaling down below, the 24 range down to a 12 range, it allows me to get into a better price, a little bit more precise with my entry. So that's why scaling down into lower time frame charts, that's what it does for you. It provides opportunities for you to be able to see on a lower time frame where you could possibly get in at a better price area, okay? But that's all I have for you guys today. I just wanted to share that with you. That trade provided me 78 points, 315 ticks on this one trade, okay? But yeah, I appreciate everyone tuning in. If you're interested in joining our Discord, people always ask how they can join. Find the link down in the description portion of this video. Click on it and invite yourself in. It's free. We have over 1,000 members now, and the community is growing by the day. If you're interested in becoming an elite member and receiving the trade breakdowns, to where I go in detail about the actual trade setups and breaking them down as far as what I'm looking for, what I did look for, and the reason why I enter the trade, it helps people. It really helps people understand the strategy I use and how effective it is, as well as why I actually executed or got into position in certain areas. All right, so you can simply click on the membership tab on the YouTube channel. Okay, here on the YouTube channel, there's a link that says membership. Click on it. There's 2 tiers there. Most everybody, especially the ones that want the trade breakdowns, the video playlist, to where I basically hand selected a list of videos that I felt would aid or help individuals basically understand or grasp how I trade. You also receive that in becoming an elite member. But anyways, you can find that by clicking on the membership tab. You will see a tier. It's labeled, I think it's elite membership. Okay, if you click on that, it's like $6.99 a month is what it is. Okay, basically a price of a cup of coffee. You're receiving that information, that valuable information, for $6.99 a month. Okay, so that's up to you if you choose to or not. But again, you're supporting the content that is here on the channel, supporting me as a creator, a content creator as well, and you do receive perks and rewards behind it. So if you click on the membership tab, you'll see all the perks and rewards that you do receive for each, for one tier or the other. Okay. Appreciate everyone tuning in today and watching today's video. Please take the time, if you haven't subscribed, by clicking on the red subscribe button. Click on the bell next to it. Turn all your post notifications on. And please drop a like on the video. Take care.